am Dr. P. Sarita, Assistant Professor of Commerce. In this video, I am going to explain about the deductions in income tax law and practice. Deductions are very important for income tax law and practice, and it's one of the tax planning aspects of an assessee. For example, while we are going to calculate the gross total income, all 5 heads of incomes are going to be considered, and from that we are going to reduce the deductions. There are two types of deductions in respect of certain payments and deduction in respect of certain incomes. Certain payments covers under section 80C to 80GGC and incomes related to 80IA to 80U. Now in this video I am going to explain about the deduction in respect of certain payments covering section 80C to 80GGC. The first one is regarding 80C. 80C is nothing but contributions towards life insurance premium and contribution towards provident fund. Covers under section 80C. The quantum of deduction is up to 1,50,000 and assessees who are entitled for deduction is individuals and assessees. The qualifying amount for paying and life insurance premium in LIC is before 1/4/2012 shall not exceed 20% of sum assured. That is nothing but the sum assured we have to calculate 20% and compare it with the premium paid by an assessee. And whichever is less is going to be the qualifying amount of deductions, and it's the quantum of deductions also. If the life insurance premium has been paid after 1/4/2012 shall not exceed 10% of capital sum assured. And if it is paid for a disabled person after 1/4/2013 means 15% of actual sum assured has to be considered. Apart from contribution towards LIC, contribution to Public Provident Fund is also allowed. Contract of annuity, then Provident Fund Act 1925, contribution towards Public Provident Fund, contribution by an employee to a recognized Provident Fund, contribution by an employee to an approved superannuation fund, subscription of NSE 8 issue and 9 issue, contribution to unit linked insurance plan under Unit Trust of India, then interest due on a national savings certificates, term deposit for a period of 5 years, deposit 5 years post office time deposit account, deposit in senior citizen savings schemes, deposit in Suganya Samriddhi account, and tuition fees is also considered under section 80C, and the quantum of deduction is up to 1,50,000 rupees. The next section is 80CCC, and it's regarding to the contribution of pension fund, that is annuity plan covered under life insurance premium or life insurance contributions that has been made by an assessee towards pension fund will be considered. And the assessee who is entitled for deduction is individuals alone, and the quantum of deduction is 1,50,000 or actual amount paid, whichever is less is considered. And the next section is 80CCD. 80CCD is nothing but subscription and contribution in pension fund of a central government, and this regarding that contribution has to be made by the central government employees alone. The quantifying amount of deductions will be amount deposited by an employee or 10% of salary, whichever is less, and amount of contributed by the central government or 14% of salary, whichever is less, and other individuals up to 20% of gross total income. The assessees who are entitled for deductions are the employee who are working in a central government job or being an employee of an other employer, and assessee being an individual, whoever it may be, but the contribution has to be made towards the central government only. And the next one is 80CCE. It is nothing but aggregate amount of deductions under section 80C to 80CCC and 80CCDI shall not exceed 1,50,000 rupees. And an aggregate section of 80CCE, the qualifying amount is rupees 50,000. In addition to rupees 1,50,000 will be eligible if the contribution has been made towards pension fund alone. Next one, we will move on to the next section, that is 80D, 80DD. 80DD is nothing but related to medical treatment alone. The assessees who are entitled for deductions are individuals and IGF. The amount quantum of deduction for this section is For disabled person, the amount is rupees 75,000, and for severe disability means 1,25,000. That is nothing but a person who is physically handicapped means he will be able to get a deduction of rupees 75,000, and if an assessee is going to be blind, completely blind, or with severe disabilities is there means up to 1,25,000 rupees can be claimed. Here, whichever is less concept is not applicable. If the person is going for a medical treatment and is a disabled person means we have to give amount of 75,000 as a whole. Next one, we'll move on to the next section, 80DDB. 80DDB is regarding the medical treatment. Okay, again the same concept only is used, but the before one is for disabled person, now it's for a normal persons, and the persons who are eligible are individuals and IGF in India. The quantum of deduction is actual amount paid for the medical treatment or 40,000, whichever is less will be considered. And for senior citizen, the amount paid or rupees 1 lakh will be considered, whichever is less will be considered. We will move on to the next section, that is 80E. 80E is nothing but the payment of interest in loan for higher studies of a self or relatives. The assessees who are entitled are individual, and the quantum of deduction is amount paid for higher education, and the loan amount that has been taken will be the full amount for the quantum of deductions qualifying amount. Next one, we move on to the next section, 80EE. It is regarding the interest on loan taken on a residential house property, and the assessees who are entitled is only individual is eligible for this deductions, and the quantum of amount is rupees 1 lakh, it's 50,000 only, but we have to consider the 2 points. The acquisition value of house property does not exceed 35,000, or value of the stamp property of an house property does not exceed 50,000 means the quantum of deduction will be 50,000. And the next section is 80EEA, same regarding with the house loan property only, but the stamp value should not exceed 45 lakhs, and the quantum of amount will be 1,50,000. There are two categories that has been differentiated under 80EE and EEA is, first one is in 80EE, the loan has been taken from 1/4/2016 to 31/3/2017 alone will be considered for the quantum of amount of deduction 50,000. In 80EEA, the financial year in which the loan has been taken from 1/4/2019 to 31/3/2022 will be considered for the quantum of amount of deduction 1,50,000. And the next one is 80EEB is regarding the repayment of loan for the purchase of electric vehicles. We can purchase an electric vehicles by taking a loan, and the eligible assessee is individual alone, and the quantum of deduction will be 1,50,000. And the next one is 80G. 80G is regarding the donations to contributed to an approved provident fund or any institution or a trust or a charitable trust, whatever it may be. In that, the assessees who are entitled for deduction is all assessees are entitled for deduction. The quantum of deduction will be classified into 4. That is, the first one is no limit with 100% and no limit with 50%, with limit with 100%, with limit with 50%. First, let's have a look over no limit with 100%. In that, 100% amount contributed towards donation will be eligible for deductions, like it includes the contribution towards National Defence Fund, Prime Minister National Relief Fund, Prime Minister Citizen Assistance Fund, National Foundation of Communal Harmony, Swachh Bharat Ghosh, National Children's Fund, Clean Ganga, etc. Whichever donations that has been contributed towards a national eminence will be considered for no limit with 100% deductions. Next one, no limit with 50% deductions. The donations contributed towards Jawaharlal Nehru Memorial Fund, Prime Minister Dot Relief Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation will be eligible for no limit with 50%. Next one, with limit is allowed with 100% qualifying amount for promotion of family planning by the government. It can be either local authority, institution on behalf of central government. They can take step for promotion of family planning is eligible for with limit 100%, and some amount of paid towards the Indian Olympic Association for development of sports or infrastructure in India. It's a qualifying amount for with limit 100%. Then the last one is with limit donation with 50% is there for government or local authority. Any charitable purpose they are maintaining for the purpose of promotion of family planning. Then charitable trust will be there. Then accommodation of purpose of planning development or improvement of cities will be there. Then repairs related to any contribution towards the temples, mosque, gurudwaras, church, etc. will be considered for with limit with 50% amount. Next one is 80GG. 80G is regarding the expenditure in respect of rent paid. The persons who are eligible are individuals alone and they might not have received house rent allowances. They will be considered for this section. And this one, the quantum of deduction, there are provisions are there. The first one is excess of rent paid over 10% of total income. And the second one is 25% of total income, or a maximum amount of 5,000 per month will be considered, and whichever is the least amount is going to be considered for deductions. Next one is 80GGA. It's regarding with the payments to research association, to an university or college, or scientific research, statistical research, and contributions towards the rural development of training persons, etc. And the assessees who are eligible is all assessees are eligible for this deduction, and the quantum of deduction will be 100% of amount paid towards the scientific research or development will be the eligible amount of qualifying amount for deductions. And the next one is 80GGB. GGB is regarding the contribution to political parties. At the time of election, the persons who are contributing towards the political parties will be able for getting the deductions available under section 80GGB, and the persons assessees who are entitled is Indian companies alone eligible under section 80GGB, and the quantum of deduction will be 100% of sum paid. And the last one is 80GGC, that is also regarding contribution to political parties, but the assessees includes except local authorities, judicial person and Indian companies, all assessees like individuals, IGF, firm will be eligible for this deduction under section 80GGC, and the sum assured is 100% of sum paid towards the donation will be the quantum of deduction amount. These are the deductions under section 80C to 80GGC in respect of certain payments. In next video, we will continue. Thank you for watching this video.